As Australia enters the caretaker period following the federal election call, many potential homebuyers are apparently becoming hesitant to jump into the market after that initial burst of confidence following February's rate cut. But according to finance and money expert Chris Foster-Ramsay, says buying now could pay dividends in 12 months. Good morning to you.
Good morning.
Why didn't we get a rate cut? I was guessing it's because we are in that caretaker mode, or what does history show?
Well, look, two things. I think that's, absolutely a valid point and probably part of the reason. I think the other part of the reason, if you go back through history and certainly in my very own personal opinion, you would see that rate cuts generally happen once, and then there's a period of time between sort of 45 and 90 days where those that make those decisions just stand by to see what happens in the economy, to see whether another one is due. So we wouldn't ordinarily see quick successions. Obviously we did during the pandemic, but probably in normal terms wouldn't see that, I wouldn't have thought.
Would the fact that housing prices lifted, and we had that news earlier on in the week, on Monday, would that have played into Tuesday's decision?
I don't think so. I think that data's probably a bit fresh from experience. I think that they really look at the older data of, between 1 and 2 months old. So I don't know that sort of data, that fresh, would influence a decision like that.
That quickly, all right. So you say this presents a unique opportunity for savvy buyers. Tell us, how do we be savvy and what's the opportunity?
Well, I think the biggest thing here is two things. One is that during election periods, whether it be state or federal, generally speaking, we see hands go back in pockets and people pull the line out that they pull out every Christmas. Oh, we'll wait till next year, or wait till XYZ finishes. So what we hear a lot more around this time is we'll just wait to see what happens with the election and see who comes into power and what policies are announced, and then we'll continue making our decision, which really sort of, when it's tested, has a mixed sort of outcome. So what this means is that if you're selling a property or looking to buy a property at this point in time, I would say that negotiating power goes back to you, because the pool of buyers, generally speaking, may be smaller for that particular area. So the ability to snag a deal, may come to the forefront yet again.
Now, we spoke last time about increased number of pre-approvals. Now you're also talking about higher borrowing capacities. How's that working?
Well, the RBA rate decision, by dropping the rate 0.25, that then flows through on the other side to make a difference as to the interest rate that you're assessed at to borrow money. So, RBA drops rate by 0.25, increases the ability to borrow by, whatever it is. It's usually between sort of 20 and 70,000, but depending on the person's situation. So the pre-approvals, there are more pre-approvals in market. We're seeing potentially, the opportunity to buy something now. Now, where that's going from here would be that, there is an argument, and argument's gone by in the past whereby as things start to settle down through the interest rates that have happened previously, and will hopefully continue to happen in the future, and a more stable sort of buying market and selling market, then the chances of competition in terms of supply and demand, all those dots can link up to make more of an influence in terms of how much you would pay for a property.
So less competition, better negotiating power, which could lead to significant savings. But again, is time your friend, or are these sort of upfront savings?
Oh, look, I think that if you were to do it in the next sort of 6 to 8 weeks, I think there's a window there. After that point, it may change. But I would certainly say that if you're in the market now and you see something that has been on the market for a while, still absolutely do your due diligence and your checks, and make sure that you speak to your lender, your borrower, your banker, or your broker, just to make sure that you can borrow the money as planned. But certainly I wouldn't be holding back, because I think there's a real opportunity there to take advantage of the market situation at this point.
And if you aren't one of those that have already got pre-approval, would you recommend jumping in and getting that? And is that a long-winded process?
For sure, I would recommend going into any property transaction or negotiation with a fully assessed pre-approval. That is, that your application's been assessed by a lending assessor, and you have tangible feedback on what they require in order to fund that loan. It's usually one or two things, and that process that generally doesn't take too long. It's sort of between a week or two for most applications. Obviously, it can be quicker or a little bit longer than that, depending on individual situations. But generally speaking, it can be sort of done in a week or two.
Chris Foster-Ramsay, finance broker and money expert. Thanks for your time.
No worries.